Hi folks, it's Mike Sullivan with Florida Homes. Question that's often asked of me now that we're in the coronavirus and staying at home and doing the social distancing thing is, should I be buying a home now? And obviously with our economy and the situation that it is, and with unemployment where it is, certainly people have valid reason to be asking that question. But let's take a look at some of the data and let the data kind of guide our decision. My answer to that question may very well surprise you. I know that if you have a realtor talking about the market, generally the realtor is going to tell you now's a good time to buy. And my response to that question may surprise you a little bit in terms of what my advice would be. So let's do what is the prudent thing to do in this type situation, and that is let the data guide our decision. So as you know, recently what happened here, particularly last month, this is an announcement from May the 8th from the Bureau of Labor Statistics. And if you remember when they revealed the unemployment rate for April, it went up to 14%, 14.7%, with roughly 20 million people losing their job in the month of April. When you think about that, obviously we've got people that are hurting and people that are not able to continue their financial part of their lives the way that they were before. 14.7% is extremely high, and certainly it's at a recession level, if not approaching a depression level. But on the flip side of that, we've got about 84% or 85% of the people that do continue to work. So what else impacts our housing market? And one of the big ones here is the interest rates. And you can see here, this is from Freddie Mac, and it's the mortgage rates that we currently have. And you can see the trend here over time. This goes from back in 1980, thereabouts, and even prior. And you can see it's been a continual downtrend for interest rates in all types of mortgages. Our 30-year interest rate now is 3.26%. That's the lowest it has been in 50 years. And actually, I believe it's the lowest that's been recorded. So what does that tell us? You know, it's good to have a low interest rate, but what does it mean? Typically, when you experience a lower interest rate, you see increased demand for housing because it becomes more affordable to more people. The lower the interest rate, the more you can afford to put in the house. You know, the interest rate or the mortgage payment at a 3.5% or 3.2% mortgage is obviously much less than if the interest rate was 6%. So this is very positive for the housing market, and we continue to see interest rates remain very low. And what is the Fed is doing with everything that's going on now is they continue to try and stimulate the economy, and they're doing everything that they can to stimulate our economy to keep us from going deeper into a recession. So this is a very positive thing that we're seeing. Another thing that we are seeing here is the value of equity that people have in their homes. And what this chart is showing here is there's $15 trillion that homeowners have in their home across the nation. Now, this is a number from 2018. Obviously, that's a little dated. But if anything, in 2019, that number would have gone up. It certainly wouldn't have gone down. So what that's saying to us is, with the equity that a person has in their home as a result of the appreciation of that home, People are less likely to walk away from their homes the way they did in 2008. And you can see with the housing crisis in 2008, the amount of equity that people had in their homes was like 6 trillion. It was very, very easy back in 2008, the end of 2007 to get a mortgage. Basically, you just had to say, I'm making so much money. In the verification process, there was lax, to say the least. So basically, anybody could qualify for a mortgage. We learned as a result of that not everybody can qualify for a mortgage, and lenders tightened up their loan requirements as we went through that period where we had the housing crisis of 2008, 2009. And there was some legislation passed back in those days, the Dodd-Frank Act being the primary one, that caused lenders to tighten up their requirements. And what you saw then is as requirements were tightened, you had less people to qualify, but you had more qualified buyers to purchase a home. And then they had more equity in the home. Couple that with the appreciation that has taken place with housing over these years. And typically, housing has appreciated at a modest level of about 5% a year. Gainesville is no exception to that. In fact, Gainesville has been right on the average there pretty much over the last 5 to 10 years. So what we're seeing is a more stable growth, and you have more equity in your home, so you're less likely to walk away from the house, and there'll be less foreclosures, which is different than what we saw in 2008. So the real question then gets, okay, this is all well and good, but what is the market in Gainesville? What's happening to us in the immediate area? So let's take a look at that. This actually is directly from the MLS listing, the MLS system. So what we want to do here, I'll show you the numbers, and then I'll share with you other numbers rather than going through everything here. So we're going to look at closed transactions for the city of Gainesville, and we're going to be looking at a period here of April the 1st, March, let's do January 1st. January the 1st of 2020, and let's go through April 30th of 2020, just to show you where the numbers come from. So during that period, these are closed homes or closed sales that we had from January of this year through April 30th of this year. And the number there is 640. So that's one number that is important to us as we look at the housing market. You see, we had 640 transactions. The other number that's important to us is the days on the market. It was 95 days on the market. And then we look at the median sales price. I don't use the average because that's just dividing numbers. The median, I think, is a more indicative number of what home values really are. And you can see it was $249,990. Median price is the price exactly in the middle. 50% sold for more, 50% sold for less. So that's the numbers that we look at for January through the end of April this year. Obviously, the pandemic really started having an effect on us mid-March through the current day, through May 12th. So let's look at the impacts of that. Here's the numbers doing that same type exercise that we just talked about. And you can see here, this is last year, January through April, the end of April last year, we had 683 homes that sold. The median price was $233,000, in the average days on the market was 101. This year, this is no surprise. The number of homes that were sold is less, 640, but which is 6% down. So we're down 6% for the first quarter plus April, which is no surprise because in the month of April, this is comparing April of 2019. I've got a typo there. This should be 2019. Comparing that to this year, we're actually down 27% of houses that have closed for the month. Not surprising. The real estate industry is changing quite a bit. We're not able to show homes the way we used to. And to be quite honest with you, home sellers as well as home buyers to a certain degree have a certain amount of fear in that they don't know what the future holds. And the only way we can get assurance there is to look at what's really happening in the market. The median price last year was $233, almost $250 this year for an increase of 7.3% if you round it off, which is actually above the average for what it's been for the past 10 years or so. So very strong growth in the value of your home. This one is surprising as we look at DOM as days on the market. So actually for this year, we were selling homes almost 6% more quickly than we were last year, which is a positive sign for home sellers. Now looking at April of 19, the average price was $242,500. That's just for the month of April, as compared to $248,000 this year. So you see, just for the month of April, even though everything was slowing down, the price of the homes still continues to go up. So it's about 2.25% more for the month of April this year as opposed to last year, which is a positive thing. Home values continue to go up. This one is an interesting one. The average days on the market for the month of April actually sold more quickly. This is one that kind of surprised me, to be honest with you. I would have thought with everybody staying in, social distancing, I would have thought that our market would have slowed down quite a bit. But actually what's happening here is the number of homes that closed did reduce by a significant amount, but the time it took to sell was actually 20% better, 20% faster than it was for the year prior. Another factor that we look at is the supply of housing. So currently we have 439 listings, and we've closed 160 in the month of April this year. So the supply of housing is 2.74, almost 2.75 months. So what does that mean? Basically, anytime that you are in you have two types of markets, actually three. You have a seller's market, a buyer's market, and a balanced market. And if you've listened to real estate and realtors and over the past couple of years, you will know that we have consistently had a shortage of housing. We didn't have enough housing, and we were down to like 1.25 months of housing, which means that it's very heavily weighted in favor of the seller. What's happening here is we're seeing more of a balanced supply because we're not selling as many homes. You can see that the number of homes is going down. And so the inventory or the supply is going up, which is more of a balanced market than it has been in the past. It still favors the seller. So if you are a seller, you probably, and then you price your house correctly, you can probably expect to sell your house within about 90 days or so, which is a positive thing for the sellers. Also, it's a positive thing for buyers too, because the availability of the housing is going to be more than it was in the past. So as we think of all these things, then we get back to the question, which is, should I buy a house now? And the answer to that really is what you're comfortable with. You know, the answer to that question is an individual question, and it's not one that I would attempt to answer for you, but it's certainly one that you need to consider all the facts. What's happening in the market in Gainesville is homes are still selling. They're still continuing to appreciate. The availability of the housing is greater, and the interest rates continue to be low, and they'll continue to be low for some time. It's said that real estate will be one of the first segments to lead us out of this recession that we're fast getting into, if we're not already there. I don't think there's a risk of an individual losing when you buy a house. The thing which is obviously not known to us is what's going to happen in the future. But the one thing I would leave you with is we don't want to act or operate based on fear. Let's make decisions based on the data, based on what we know is happening in the marketplace, and you'll make a much more informed decision by doing that. So that's where we are through April. We'll continue to update this as we get into the future. If you have any questions at all, just leave them in the comments below. I'll be glad to respond to you on that. Or if you would like to see a market report for a specific neighborhood or a specific community, feel free to drop those comments below. And as always, feel free to subscribe to my channel. Let me know that you like it. And if you have any comments, just be sure and put those comments below again. Thanks. We will talk to you soon.